higher low, higher high, and then market goes to down, it creates lower high, lower low, lower high, lower low, lower high, and lower low. So most of the people get confused when price creates swing points. They don't understand what is happening because market is not that simple. If it would be that simple, everyone would have made money, right? So we all know price move like this. It come down, it create this, and then it come down and it create this. So this is where people get lost and they take multiple losses before the real move happen. So let's understand the order flow correctly in theory first, then I will show you into charts so you can get more clarity, and after that you need to. So today in this video we are going to talk about order flow, which also people call it market structure. Both are same thing. So if you are new to this channel, let me introduce myself. I am Harsh and I am into trading space since last 5 years, so you can trust me whatever I'm gonna teach you. Alright, so first of all, let's understand why order flow is necessary to understand, because we trade candlesticks, right? And candlesticks move in a certain way. So market move in a certain way. It goes like up, down, and sideways. It do only 3 things. So we need proper understanding of order flow to take our entry and to build our edge. And if you don't understand order flow correctly and properly, so you will get liquidated more often. That's why you need proper understanding of order flow, and it is absolutely necessary into trading space. If you understand order flow correctly, you understand supply and demand, and you understand liquidity, and you understand all of these things, and then you combine these things, and then you can create a context, and then you can take trades. So that's why order flow understanding is super important. You cannot ignore it. All right, so let's understand how market moves. Basically we all know market moves up like this. When price goes up, it break structure, we call it BOS, break of structure. When price goes down, it create breakdowns, and we call it break of structure to the downside. And price made higher low, higher high, higher low, higher high, higher low, higher high, and then market goes to down, it creates lower high, lower low, lower high, lower low, lower high, and lower low. So most of the people get confused when price creates swing points. They don't understand what is happening because market is not that simple. If it would be that simple, everyone would have made money, right? So we all know price move like this. It come down, it create this, and then it come down and it create this. So this is where people get lost and they take multiple losses before the real move happen. So let's understand the order flow correctly in theory first, then I will show you into charts so you can get more clarity, and after that you need to do practice on yourself so you can train your eyes, right, to see that into live environment. So this is like price move. So let's understand order flow. So basically when price goes up, it take pullback, also we call it retracement. Then it do continuation, retracement, we call it impulse correction. So whenever market goes upside, it create down move, then up move, it create down move, then up move. So this is the retracement part, and we call it S2B. S2B means sell to buy. So what is the meaning of S2B? Sellers pushed price lower and then buyers pushed price upper. Sellers pushed price lower and then buyers pushed price upper. So whenever the market create break of structure, so our S2B is from the higher point of the range to the bottom of the range, and whenever the next move will come, it will come to that range and then it will continue. Now the price can come into anywhere, it can just tap here, come deeper, it does not matter, we cannot predict it. Now again market push upside and created impulse, Now S2B, from the top to the bottom of the range. Then price will take retracement to the range anywhere between, we don't know where, and then another up push. This is how the up move make continuation moves, because not of market structure, because of sell to buy demand zone, because market run on supply and demand, not some fucking algorithm. All right, now let's understand down move. So price create breakdown, then from the bottom of the range to the top, this is we called buy to sell, from the bottom to the top of the range. Then market gave breakdown, we have our buy to sell, then price take retracement to that zone, and then continuation again buy to sell, then price follow same retracement, and then continuation. This is how market delivers day in and day out. Okay, so we call it B2S. I hope you understand how price moves, why price moves. All right, because there are orders in these ranges. Sell to buy means sell orders, and then buyers mitigate those orders and then continue. This is how market delivers. All right, this is price made breakdown, and then there are orders pending to the upside, price took the retracement, price collected buy orders, and then again. This is why counter traders lose money, because they don't understand where is the actual impulse and where is the flow, where is the money, where is the institutions active, and then they try back and forth trading and they lose money. All right, so I hope you understand sell to be and buy to sell. This is the order flow theory. This is how market moves. This is also people call structure, external structure, internal structure. So the simple meaning is that whatever happening between these is internal structure between our ranges. For example, this is our ranges, so whatever happening is this internal structure. People call it order flow. There are different names just to confuse, just to create confusion. You can simply understand everything is order flow. All right, so right now we have our GBP USD chart. So now I am going to show you practical examples, so you will get the more clarity and easy understanding. After that, you need to practice this and train your mind to see that on live environment. All right, so let me show you some practical examples. Okay guys, so this is our GBP USD 1-day chart. So whenever you start to analyze your chart, always start with top down analysis, and this work on every time frame. So please do not ask on which time frame you should work, because time frames are fractal. So whenever someone say which time frame is better and which time frame is worse, the question is irrelevant. So you are just asking. Let me clear this. When you go to lower time frame, you get more information. When you trade on higher time frame, you get less information. That's the only difference between time frames. And the another difference is because institutions trade on higher time frame, that's why higher time frame gives follow through moves and lower time frame gives just reaction and then they get failed. So that's why people struggle on the lower time frames. Okay, so this is GBP USD 1-day chart. So another problem people face, where to start our analysis. So just open the chart and see these two things, like top of the range and bottom of the range. That's it. Then you can start your analysis or practice. All right, so this is the GBP USD chart. We can see price did breakdown. Okay, so I am doing the analysis in front of you so you can get the clarity. So now we have breakdown. When we have breakdown, we understand we have buy to sell range. Okay, so this is the breakdown. So this is our bottom, and where is the top of the range? Here. All right, so what price did? price made another breakdown. So we have another B2S, buy to sell. Okay, then price broke these range. That means now it is trying to go up, but it is not yet confirmed. So now it broke upside. So we have S2B, our sell to buy range, right? Let me change the color. All right, then price goes to the upside, mitigate our sell to buy range orders, and then take retracement. This is the retracement, and then broke upside. So now it created another S2B range. So now price just did breakdown. So this is our impulse lag. Then it created two upside breaks, break number 1, break number 2. So it is indicating that buyers are strong and buyers are trying to push the price higher. All right, then we have another break. Now price is still in our S2B range, and then it created another breakout. So now we have another sell to buy range. Remember, from the top to the bottom, sell to buy, right? Sell to buy. All right, then what price did? Price take retracement where? In our sell to buy range. As you can see, price is now creating another breakout. So what price is doing now? It's creating build-ups. This is when people call it channel, right? Price is moving in channel, and that's why patterns do not work, because it is what price is actually doing, is creating build-ups. Okay, so price created another break of a structure. Now we have what? Our sell to buy range, from the top of the range to the bottom. Where is the bottom? Here. Then what price did? Price take retracement where? Into our range. I told you it can retrace anywhere. It can just mitigate, it can come deeper, it can come more deeper, we do not know, right? Then price did what? Another break of a structure. Then sell to buy, right? Then what price did? Price came down and violated our range. Now when price did not respect our ranges, sell to buy, buy to sell, this is the first indication that price wants to change the trend. Again, it is not yet confirmed, because price can break one range, it can come to the another range and then continue push up. This is why chalk traders fail. What they do is, when price did this, they think, oh, it is a chalk, and they try to sell here. Then price do this and then took their stop losses. So whenever the first break happened, we expect price to come to the another range and then do continuation. But when two ranges failed, or when price created another double break to the downside, then we can expect the opposite selling counter pressure is super strong, and then we go to bearish. All right, we change our bias. So right now we broke one range. Now it is not confirmed, it is bullish or bearish. So we have now what? Our buy to sell range, right? Let me change the color. Now what price did? Tap into our range, break down, again small ranges, and then price broke our another range. Now we are confirmed that we are bearish. Why? Because we violated two range number 1, range number 2. Now what we have? Our buy to sell range, right? So where is the range? So here we have our big range, and in the big range we have our smaller range, right? So we will use the smaller one. Why? Because the break come from here, not from here. This is not a direct breakout, right? This is a indirect break. So this is the important point, not this one. I often see people use all of the big ranges, and there is no point. You will take multiple losses. You need to check where is the break came. So in this case, this came from here, not here. I hope you are understanding my point. Now price did what? Again down break. What we have? our buy to sell range, right? Now price did what? It violated our one range. As I told you, this is just one break. We do not expect reversal with one break, right? What we expect is more continuation, because price grab liquidities, and it is a Wyckoff redistribution concept, which so many people also known as price grab, buy side liquidity as a smart money space. So what price did? Price violated one range. Now our overall range is still protected. Remember, price didn't violate two breaks, right? It just grabbed liquidity, and then what it did, again push lower. Now what we have? Another breakdown. What we have? Our buy to sell range, right? This is buying to sell range. Now we have another break. What we have? Our buy to sell range, right? Now price respected that range, tried to push lower but failed. What it did? Broke the range. Again, it is just one break. Our overall range is still protected, and this is where GBP USD is currently. We are into our overall buy to sell range, right? It means we are still bearish because price just broke one range. So now it broke one range. What we have? Sell to buy, right? Let me change the color. So now GBP USD is not confirmed whether it is bullish or bearish, because we have our demand range here, supply range here. So this is the no trading zone area. We don't know where the GBP USD wants to go. When GBP USD will break this low, then we can expect continuation. And however, because the order flow overall is bearish, so we can expect to sell right now. But we understand also below we have the buyer's pressure, so we will further wait to GBP USD break this low, or GBP USD break multiple lows. Then we can expect selling pressure. If GBP USD continue break upside, then we can buy and target this structure. Alright, so I hope you understand how market moves, how ranges work, how order flow works, why patterns don't work, because it's all about supply and demand. Price move in a ranges, price create demands, price create supply, price respect demand, price respect supply, and whenever these ranges get violated, trend changes. Whenever these ranges get respected, price create build-ups and move continuation. It's all about impulse and correction, not some kind of rubbish bullish channel or bearish channel or double top or double bottom. It's all nonsense. Market works in cycle. I'm not saying you cannot be profitable with patterns. You can, if you combine your patterns with market cycle. So if you are still watching this video, it means you don't have the chicken brain. Your attention span is very good. And let me give you some bonus tip, so you don't get trapped into reversal. So whenever price moves to the upside, now we understand price created our ranges, right? Sell to buy, sell to buy, sell to buy. So whenever price goes up and it created one move, do not short. Why? Because we understand we have our sell to buy ranges below and expect price to continue going up. This is just a liquidity grab. The only way you switch your bias to the sell side, when price create one break and violated two ranges, this is your sign to change your bias. Range number 1 violate, range number 2 violate. Again, it's not always work, you still need context, but this is the high probability. Never ever take reversal position into one break. So yep, that's it for the today. I hope you understand how market moves, how ranges works, how order flow work, and practice this into your charts and use any time frame. It does not matter 1 hour, 4 hour. Practice it. Just remember, the higher the time frame, the better the move. Alright, so thank you for the watching. If you like the video, please subscribe the channel and like and leave a comment. It motivates me to make more videos.